Hello everyone, and welcome back to our weekly look at the cryptocurrency market on behalf of Apex Signals. We've had a bit of a slump in markets this week, as most of you will be aware if you are following the markets and trading. We can see here on the overall global chart that last weekend on Saturday we were up at $340 billion overall market capitalization. That turned into a relatively steep drop. We're currently at about 280 billion, just under that, heading into the end of the day Friday, and that's actually slightly up on the low, which was on Wednesday, which was at 266 billion. Now that was sparked, there's potentially a couple of reasons, but the main reason was a piece of research released by researchers at the University of Texas in Austin. Now they released a paper which was called "Is Bitcoin Really Untethered?" And what they were looking at was the potential market manipulation, or what they consider might be market manipulation, provoking the sharp gains that we saw at the end of last year. And their research focused on the cryptocurrency Tether, which is something which was released by the Bitfinex exchange owners. Now the idea behind Tether is that on a lot of cryptocurrency exchanges it's not possible to make deposits with fiat currency, and that's for regulatory reasons, and the fact that when cryptocurrency exchanges start accepting fiat currency, they have to be regulated by the local regulators. It becomes a lot more complicated, a lot more expensive for them to run the service. So the Tether cryptocurrency, which was theoretically pegged to the USD, and there was also Tether currencies for other fiat currencies such as Euro and the Yen, the more popular or the biggest international fiat currencies. And the idea was that every unit of cryptocurrency Tether is backed up by a unit of the fiat currency. So one unit of USD Tether is backed up by actual USD. Now the report suggests that they believe that may not have been the case in fact, and the Bitfinex guys behind Tether, they think we're pumping out units of Tether unbacked by fiat currency at the points where the market was dropping. So if Bitcoin would have a little lull and a price correction, then Tether would be released into USD Tether would be released into the market, which was then used to buy Bitcoin, artificially boosting the price. They believe that the time and the magnitude of the purchases wasn't supported by underlying data or organic investor demand, and the crux of the report is essentially that they believe that the market was manipulated, or at least half of the gains resulted from market manipulation. And then you get into the question about whether the natural or the organic gains weren't still influenced by the manipulation, because people started piling into the market because prices were going up, and that's it's caused a fair bit of negative feeling within the market, and obviously a lot of people are questioning what that means for the bigger picture. And when that report came out, we saw on the 10th a Bitcoin sell-off, which wiped 25 billion dollars from overall market value, cryptocurrency market value, in a very short space of time. Now, it's perhaps not the only reason that's led to the drop this week. There was also a lot of signs of lower volume last week in Bitcoin trading. So Bitcoin trading volumes were down to about a half of the volume of a few weeks ago, and with the demand dropping significantly, it was perhaps natural as well that a correction was coming. And of course, at the beginning of the week, there was also news that CoinRail, South Korean exchange, was hacked. How big that an influence that was is very debatable. CoinRail accounts for only around 5% of cryptocurrency trading volume in South Korea, so that possibly a lesser factor, but there was certainly a combination of negative news which has led to this. The question really is now how long this will persist. We were talking over the last few weeks that there was some hopes that the trend over the last few months of 3 to 4 weeks of upward movement in the market, followed by 3 to 4 weeks of downward movement. It looked a couple of weeks ago that the lower lows and lower highs tendency, which indicates a longer term bear market, may have been broken, because the last low a couple of weeks ago was higher than the previous one at the end of the earlier downward cycle, and we'd seen a couple of weeks of relative stability. We'd had a little bit of up and down, but markets last week were pretty stable, and we were hoping for possibly a break back up this week, which would hopefully have indicated movement into a more positive market. This week's losses call that into fairly serious question, and we'll need to see some quite significant turnaround. Not price trajectory is one thing, but really the volume needs to improve significantly if we're going to have much hope of moving back into an upwards market. So my personal opinion is that this week's events have left things looking a little bit tenuous in terms of future prospects over the next couple of weeks and potentially a few months, and I'm now wondering if this may not lead to a bear pattern that could take us back down to where we were before the surge at the end of last year. I hope I'm wrong, but I'm starting to have my suspicions now that that's not by any means out of the question. But we'll see how that pans out. Let's quickly flick over to the Bitcoin chart here. We can see that Bitcoin dropped quite significantly. We were at 7,670 last Saturday. The low was $6,300 on Wednesday, and heading into the weekend now, we are a little bit up on that, and we're at around 6,700. So hopefully we can see some upper movement into the weekend. But I think that whether we see upward movement over the weekend or downward movement over the weekend is less important than how things go over next week. Hopefully we will get a bit of a bounce back after this week's losses. Now, one of the interesting stories this week was Ethereum Classic. It was actually one of the few cryptocurrencies that didn't suffer too much this week. We can see from the chart here, we were at about $1,550 heading into $1,550 heading into last weekend for Ethereum Classic. You can see here in the chart that it downtrended with the rest of the market following that flurry of negative news. We then had a big leap on the 12th of June, so there was almost or slightly more than 20% gain then, and that took it down from 12.26, which has gone down to up to above $16.60. Now that was prompted by an announcement by CoinDesk that within the next 2 or 3 months they'll start offering Ethereum Classic on the exchange, and that obviously provided a fillip to the crypto. As most of you will probably be aware, Ethereum Classic was the result of Ethereum hard fork, a little bit like Bitcoin Cash from Bitcoin. And Ethereum Classic essentially is the original format. The Ethereum platform believes that the non-Ethereum Classic, just straight up Ethereum, is the superior version, but there was dispute on that. Now heading into today, we're now down to below $14 for Ethereum Classic, but definitely far smaller losses than pretty much every other cryptocurrency has sustained over the course of this week. And we'll finally have a little look at EOS. If I can just find the chart here. So yeah, there we go, EOS. Now EOS also struggled over most of this week, and we were at $14.70 last Saturday. That was down to $9.44 on Wednesday, which obviously is was a fairly steep drop. Now EOS, of course, last week launched their completed the ICO, which raised over $4 billion. That made it the third largest capital raise internationally over the course of 2018. And we're not talking about cryptocurrencies here, we're talking about also IPOs on traditional stock exchanges. So only 2 IPOs in the world raised more capital than the EOS ICO. Now it was expected that the mainframe launch would coincide with the end of the ICO. There was a bit of curveball thrown by EOS at the end of the ICO, and they announced that the format would be slightly different. The idea being that the software will be open source, and that's what they released last week. And then developers were invited to build a blockchain platform on using the EOS open source code, with the community voting with their ICO tokens for validation of the blockchains or blockchains put forward. Now today the first EOS blockchain has been validated by the community. It had to pass a threshold of 15% of all the ICO tokens released over the course of the previous year. It got that meant 15 million tokens had to be used to vote for that blockchain. The EOS.io blockchain eventually managed to get past 17 million tokens, validating it. So that's now been launched. So EOS finally has a blockchain, and that resulted in a jump of over 7% today for EOS. That's taking it back up towards the $11 and slightly over mark, although it was just below $11 just before we started here. So it'll be interesting to see how quickly adoption moves on the new blockchain. What kind of applications are put together, or dApps. The company also announced the launch of a significant fund. I think it was 500 million, or it could have been 50 million, which is a fairly big difference. And that's going to be spent on investing in companies which will be building applications on EOS blockchain. The idea is that those companies will form the backbone of the ecosystem around the EOS blockchain. So they always said that a big chunk of the ICO funds would be used for that. So again, as I mentioned several times, I'm a big fan of EOS. Let's hope it goes well. I personally hope it goes well, as I have a little chunk of EOS. That's all we have time for today. Hopefully things will be a little bit more optimistic last week. I hope I'm wrong about this week's downward trajectory, possibly spelling bad news for the coming period. And enjoy your trading over the weekend. We'll speak again next week, and bye for now. Have a good evening.